With a negative return of 6.92% in May, the price of Bitcoin ended its 4-month streak of positive returns. BTC's previous monthly return suggests that it will likely also remain negative for the following quarter. Investors can anticipate that the bull run will resume in October 2023 based on this data. This bearish outlook may come to pass if macroeconomic conditions worsen. With a monthly close of $27,210, the Bitcoin, BTC, price ended a 4-month bullish streak that had begun the 2023 rally and ended with a return of -6.92% in May. Bitcoin, BTC, cost confronted serious selling tension in May, which made it drop 8.75% from its neighborhood top of $29,820. Subsequently, the month returned a negative 6.92%, finishing the 4-month positive streak for BTC. A sell-off could occur as more investors join the selling spree as hopes of a bull run diminish. Or, the price of Bitcoin could stagnate, making it uninteresting for investors and day traders. When measured over a sufficient amount of time, historical data is crucial because it reflects investor sentiment, which is frequently cyclical. Over the course of the previous 14 years, the month of November saw the highest average return for Bitcoin. In April, 36%, and in October, 26%, follow. Similarly, the best returns for the price of Bitcoin can be seen in quarters 1 through 4. This suggests that the first and third quarters of the year are typically the best times to invest in cryptocurrencies. The month-to-month return table for Bitcoin cost shows the 10,000-foot view standpoint as well as adds design to the turmoil of regular unpredictability. As found in the picture beneath, the typical return for BTC droops after April as far as possible up to September. However, the average monthly return accelerates in the most recent quarter. A straightforward decision one can make from this is that the following 3 months are logical going to be in the red or scarcely equaling the initial investment. When you take into account the worsening macroeconomic conditions, the first scenario seems more plausible. Macroeconomic conditions worsen in hindsight, it seems like COVID-19 was the beginning of what's going on in the world. Because of the abrupt end in the financial machine, national banks across the world began agonizing over an approaching downturn. To forestall a devastating breakdown of world economies, national banks chose to lube the economy by printing and circulating cash to bombing banks, organizations, and individuals. While printing money worked, it also hurt inflation a lot. Inflation in the United States, measured by the Consumer Price Index, CPI, reached its highest level of 9.1% in 2022. In economies all over the world that turned to printing money out of thin air, similar ripple effects were observed. Inflation has been under control through efforts by central banks. Similar to the Great Recession of 2008 to 2009, the U.S. Federal Reserve has been raising interest rates to stop inflation. In 2008, similar interest rate increases led to bank failure, which set off a chain reaction that resulted in the burst of the housing market bubble. Soon after the panic, not just in the United States but all over the world, there was a recession. In a similar vein, retail investors were in a state of panic when a number of well-known U.S. banks were forced to close due to the recent Fed hikes. The U.S. debt ceiling is the latest in a long line of crises. The $31.4 trillion ceiling has been removed by a vote in the U.S. House of Representatives, with support from both parties. Conclusions based on historical data and macroeconomic conditions, the Bitcoin price outlook is not favorable. Therefore, investors can anticipate so-so results over the next 3 months. In any case, from a drawn-out venture point of view, Q3 is probably going to give a lot of chances to collect BTC and other altcoins before the 2023 bull rally launches in Q4.